Hey everybody, how you doing? Tom Willard here with Tom Willard Trading. Video update. Let's talk about the markets. I did some scans here, got some great ideas to trade. I'll share them with you. Also talk about some other ideas. I'm trying to make this short, sweet, and to the point. So let's get rolling. First up here, we got the QQQ ETF here. Again, my normal setup here with the daily to the left, the weekly on the right, and then the 60 and 15 to go down to the smaller time frames for you day traders out there. Now, as you can see on the weekly chart, since July of last year, we've had some pretty big moves up and down. But ultimately, if you look at the efficiency of the market, it's we've really, in a sense, gone nowhere. Slightly higher in general on the Qs here on the weekly chart from where we started here. If you use this, obviously, if you use this, then we've gone up. And if you use this point, then we've gone really sideways. So in general, you can see that we've held this 110 area with some very, very vicious blips down and no vicious moves up really, other than the bounces off these lows. Okay, you'll notice here that we're coming up now to one of my favorite times of trading. Actually, my favorite time of the year, the 4 times there's earnings. So come October in about 3 weeks, 2 weeks, about 3 weeks actually. um, there's going to be earnings season, and that's when things kind of get more rolling here. Typically on the last month, the month prior to earnings season, I don't do as much trading naturally. There's just a lot less. And of course, with the summer, you can see here, look at the volume on the weekly chart here of the Qs. Absolutely minuscule. I mean, if you look at this last since July, the volume since July um, has been, and again, July, the first, 6 weeks or so, 6 to 8 weeks of July, that's earnings season. You can see the volume is just no one cares. It's dropped off here, and we've made new highs in that no one cares volume, which is very interesting. Okay, um, I'll talk about that here shortly. But you'll see as a comparison to the volume here, even from last summer, um, wildly different, the amount of volume. Look at the volume here on the daily. You can see it down to a smaller time. I mean, this climb. Look at the ranges. Really, not much from a day of this. Obviously there's stocks that move a lot during any given day. Even though the market, the major ETFs like the QQQ, well, I'll pull up the SPY here shortly. They don't move much. You will always find stocks that are moving a lot more. But if you had to day trade this, there's just not a whole lot of options here. Pretty low volume, pretty tight ranges, not a whole lot of movement. Um, and so we've come up here and then we've had a pretty hard turn down, okay, and then come right back up near these highs again on the Qs, at least going into tomorrow, September 19th. Um, as you can see, we've come to new highs here. We've got a leg down in volume, but we've popped back up here in pretty solid volume. Okay, and if you look to the left, we've got room to go higher if this market can go. You can see it's kind of stalled out here. The moving averages have curled over. Now the 20 here, okay, is over the 40, okay, and it's looking like it wants to go higher. Okay, right now the trend is lean toward the long side. But as I mentioned before, this overall rally is so long in the tooth. You can see it here from 2013, 2012, we know 2011 actually, right, where things kind of started moving up here. 2009 really. Things have gone up, gone up, gone up, and now we're getting more wider ranges and whippiness and volume. This is very indicative. Listen to me closely. Very indicative of a top. If you look at the size of the candles on this monthly chart compared to here, we've got the makings of a top. So it's very dangerous to be buying highs. Okay. Now, as long as you're bullish on things, you can still play the long side. I do. Just have stops, and if those stops get hit, you take them. Okay. You don't want to be holding the bag when this thing comes down to 85. Okay, if you're getting in tight here on a smaller time frame, such as a daily chart up here, and you want to get in up here, have your stop down in this area here, 116, 114, 113. There's no need to hold this thing all the way down here because when it comes, when the top comes, it could be fast and vicious to the downside. And this is very indicative of a top. Okay, so be aware of that. SPYs. Also, you'll see here on the monthly chart, right? We've gone up, on up, and now you'll see the widest range candles, okay? Widest range with volume. Now, granted, this climb here has been, in general, low volume compared to this. People were trying to, anticipating this thing going lower off this massive volume, but it just held and kept going and going and going, okay? Wider range here. Volumes dropped off on these new highs. I'd be leery on the long side. Okay, and in fact, if you want some protection, if you're long the market, I would start either selling some calls or buying some puts on these ETFs. I have, okay, on both the Qs and the SPYs. Consider that, okay, as a possible protection, if you will, on the downside in case there is a quick move to the downside. Now, let me go back to my chart here. Okay, so on the SPY here, before we move on to something else, you'll see here we're coming next to the rising moving average on the weekly. But on the daily chart, we've come down. In a sense, we're putting in kind of a reverse flag. But we are, okay, the moving average is about to ready to curl over here. So it's a very early entry to the short side if things fall apart. And with FOMC coming up, the announcement coming up here very soon, be aware there could be some much more volatility. So be prepared. I'm excited to be day trading this week, and obviously, you know, the volatility could be there to really do well. As long as you stay on top of your game, and again, focus on what you're doing, find your ideas, stick with your plan, and take your stops when they don't work out. So this is actually flagging here where a break below 212 could definitely be a nice short, okay, to the downside. A lot of area to move down. Okay, there's not a lot of support here, maybe a little bit at 208, so there's a lot of area for this to move. The volume here was hard and fast compared to here, and I think that this thing could fall apart. So if I were you, for me, I'm leaning more on the short side. Okay, although dovish news, you know, could be baked in. We'll see what happens. But anything up at these highs, like I mentioned in general on these charts, I would be concerned. And again, pull the ripcord if things aren't working out really quickly. If you're on it going long in this market that's very tired, and with the political season and election coming up here soon, a lot can happen. Okay, so be aware. Gold in general has pulled back. You'll see the GLD here actually hasn't pulled back that far. If we focus on the weekly chart, it's just pulled back to the rising moving average. It's really held up strong. However, you look at like GDX, you'll see the miners have taken a more deeper pullback here. You can see this pullback here into this area here. Now these are in buying areas on the weekly charts, but you just got to find a pattern to buy. Okay, so I'm looking for ways to get into the positions. I liquidated a bunch of them, but held small shares, so I'm holding shares in a lot of these still, but very small positions as I took these big runs up profits. But this gold here, for example, is pulling right back into the buy area here at support on the weekly chart. Daily chart's a little bit more sloppy. I'd love to see this retest this area here. If it can hold this area right about, what is it, $93 a share, and can hold and start to move back up, especially with an FOMC, this thing could gap down to 70. You never know if they tighten. And it could gap up. I remember the last time they tightened was in December. Right here was when the FOMC tightened and this thing took off. Okay, kind of counterintuitive to the general thought process around that. Okay, around dollar strength and weakness and tightening and that sort of thing in relationship to gold. So GLD or GOLD here is also looking as a buy. So if you're a gold bug, you like the silvers, the golds, they're all pulling back nicely, giving you good entry points, good entry prices. Not exactly points yet based on your pattern. Here's another one on the daily charts. Pulled back, came down to support, came up. Now it's testing. If it can make a higher low here, you can look to get long and obviously pull the ripcord if it breaks below your low. Okay, to your plan. Get a stop in there. Rising moving averages, the trend is higher. Okay, and you're getting your pullback here to get things cheaper if you're interested in golds and silvers. Okay, I'm going to share just a couple of my ideas I've got for my scans for this week. And this is one. It's a short GNC here. You can see it's been in a downtrend here on the weekly, downtrend on the daily. Big red bars in volume as it tries to go higher, comes down, comes down. You'll see here now it's kind of basing as the moving average catches up. I just think this thing could go a lot lower. Watch it for a breakdown. I am. If you're aggressive, you could probably take it here below $20 a share with a stop rate above these highs around $22 a share. Okay, and looking for another move down here of about $6 to $7 a share, so maybe in the 12 to 13 range. Obviously, ultimately, it could go to zero. If the market collapses, something like this in a downtrend could really fall apart. But GNC here, I think, is a great idea to watch as a short idea over the next few weeks. Contrary on the long side, Fitbit here looks interesting. You can see here it's come down. It's kind of bottomed out here, got a really good push in volume and based out here, okay? And now is looking to try to push. Now again, it's run up from 1450. I wouldn't want to buy this over the highs tomorrow, even though that's technically the extra entry point, okay? You would have to put your stop in underneath these lows at around, say, 14 and change a share. But watch this as a long idea. I like this fit as a long idea. Now, I tweeted about CSX. I entered CSX. Very similar type of bottoming type pattern, came up, popped up on volume. Look at this base. Look at the volume in the base here. You basically got a cup and handle, okay? First stage as things start to roll over, okay, as it starts to pop up. But I'm in this thing as a long, I think it's a good idea. And obviously my stop is below these lows. If it falls apart, goes down there, you just get out. It's pretty simple, okay? But I tweeted about this. It's another one I think is worth watching and alongside. And again, I'm already in. Another one to watch here, Sanchez Energy, SN. You'll see again, it's come down, bottomed out, came up here in pretty good volume, then it's come down, popped back up. Okay, you got a little bit of a cup, possible handle here forming. You're looking for a break above $10 a share with a stop wherever the low of this handle is. Okay, and again, market supporting. Watch this. This is another one that I'm watching. I'm not in this one right now, but watching this as a possible long. Okay, last but not least, here's one to watch, FCX. Now, I talked about this too. I actually bought this on this day here, this green day here. When it gapped down and it started moving up, I bought it right in here, okay, and then rode it up, but then it came right back down and stopped me out. So I got in and took a loss and got out on this thing. But I'm watching it still, okay. I'm completely flat, but you'll see the low at 943. Okay, here the low was 982, so it took it out by about 40 cents. That's where my stop was right on that point. Okay, you got another stop here, or another pivot point at $9.33 on the low side. If this holds up on this bigger volume, okay, and this name starts to move higher, I'm looking to get back in here more toward the basement, but of course, pulling the ripcord if it breaks 933, that area. Okay, so another one worth watching. It's one that I did get in, and I did get stopped out for a loss, but I'm watching to get back in. I'd be premature to buy it here over this $10 share mark. Stop. You could technically buy it over 10 with a stop under here. But again, I think I want to see a little bit more information. Of course, let the dust settle from the FOMC announcement that's coming up. Okay, but this is another one I'm keeping an eye on here that I was in and out of last week. Okay. All right, guys. Hope you found this video useful. As always, you got questions, hit me up on Tom at TomWillardTrading.com. Have a great week, and I'll try to get back to you guys here right when earnings season starts with another video, some ideas. Trade well. Talk to you guys soon.